Hello everyone, and welcome back to another market review. This is Silent. Today we are looking at the NASDAQ December contract for 2025. We are starting off with the weekly chart, and so far again we have pushed up into that previous up close candle and came off of the high that's produced so far in the week. In today's price action, we are spending a little bit of time inside of this gap from the week. I'm still favoring an upside delivery to get a draw on liquidity up to the previous weekly opening price. So long as we stay above the 25,197 level, I will remain bullish. On the daily chart, you can see how price created that daily candle that we were expecting today. Price slightly rallied above the previous day high and then came back into its range and then closed off with a high. We didn't get a bold down close candle like I was expecting, but with this doji would do the same effect. We've created a down close candle inside this gap range, so I'm leaning towards this area being reclaimed for bullishness here, and we'll confirm that tomorrow if price can drop down into this wick, respect the upper half, and then start to rally. My immediate draw on liquidity is going to be that daily fair value gap there. Alright, on the 4-hour chart, I've adjusted the mitigation block level from just the wick to just the body, and I've extended it out in time. You can see how price had come down into that range, stabbed into it, and stayed above the upper half, and then pulled off of the low and closed here on the day. All we did today was a slight retracement into that long wick. We didn't end up taking out any sell side liquidity like I would wanted to, but dropping down into a discount like this is doing its job just as well. Again, we're going to be looking toward those highs for tomorrow and going into the rest of the week. On the 1-hour time frame, I'm adding our daily delineations and our midnight opening prices. The past couple of days has just been an immediate rally and then a consolidation day so far in the week. I'm wanting to see the overnight price action create this kind of vibe here and stay above the halfway point of that new week opening gap from the 26th. If we can stay above the upper half of that range, I'm going to be keeping that bullish bias for a run into the 25,900 level. We are spending a lot of time inside this inefficient range, going back and forth in order to deliver both sides of the market and kind of build in a strong base for us to expand later on is my thinking. Alright, so I'm adding our Asia ranges on our 50-minute time frame. We can see how price created our Asia range above the previous day and above Friday, but it didn't create that expansion move that you would expect because the previous day was lower. All it did was signal a high is in place with no rally above it during the London session. We stayed in the lower half of the Asia range, and this early warning sign is signaling to us that yes, we're going to have a pullback day, and it comes back down and drifts slowly all day into the low of the new week opening gap from the 26th. We spend a lot of time accumulating at that low. You can see how the bodies respect the low of that with the candle open and closes of each of these here before pulling off of the low and shifting market structure to the high here. There's a small little fair value gap here that price could dip down into, and if we overshoot that, again, we might as well deliver into sell side first before rallying higher. If we stay strong with this fair value gap, I'll be thinking that this sell side liquidity from yesterday is going to be saved for the end of the week or for next week. On the 5-minute time frame, you can see how price created that high of the day in Asia and then drifted lower all throughout the session. Crossing over midnight, we get a retracement as London Open begins into a bearish fair value gap. Price rolls over here under the low and continues drifting lower. We get an inversion fair value gap here, trading below it and respecting it as a premium array here. Displacement to the downside under this low, a retracement into that fair value gap, continuously selling off. A lot of back and forth price action today. You would have definitely wanted to be on the higher time frames and risking as least as possible if you were engaging today. This is not a day where you want to be risking high because it's a bank holiday, and this is the type of price action that is common on days like this. As we go into 11 o'clock, we get a midday reversal, which drops down for extreme retracement and even swipes out the initial low. Price climbs back up through the inefficiency to the downside that was created here, and rallies, and then utilizes the up close candle here as a breaker with this down close candle here. Smart money is relieving their underwater short entries from this candle on here and then buying them and rallying higher into all of this buy side liquidity. and it's a lot of chop back and forth to close the day. On the 1 minute time frame, I'm just bringing in our first presentation fair value gaps. You can see how today we dropped lower with that first presentation. Price rallied above and took out the short-term high, but left the high in place from the market open. We travel back through and under the first presentation fair value gap and begin treating it as a premium array. Price drops lower into the higher time frame new week opening gap low, and has a retracement all the way back up into that same level before dropping lower heavily and taking out everyone who was trying to buy early. Price consolidates here with a reversal, leaving this fair value gap. You can be a buyer here on top of the Wednesday opening range imbalance with a strong rally, continuously getting buy signals here with Monday first presentation and new day opening gap low. Travels back into the first presentation fair value gap for a third time, so dropping lower and coming back into it once again. You're going to be wanting to fade this as a bearish array. So after this drop and consolidation here, any return back into this first presentation is not a bearish sign. You want to be switching gears here and expecting that that level is going to get blown out. It does that and leaves it as a breakaway gap. A lot of choppiness through the open of the afternoon, comes down, sweeps out some lows, and then breaks up with a first presentation of the PM session, and it's left open until price has delivered its high for the session, and then comes back lower and utilizes that first presentation as a draw on liquidity from getting short up inside of this sell sign imbalance. After dropping into that level, there's a lot of pinging back and forth between these higher time frame levels and previous day's first presentation. And going into the end of the day, we just chop, listlessly back and forth, grinding out all the traders who have made money so far in the week. So going into the rest of the week, just be careful. I am hoping that price will clear up a little bit and we can get some nice moves going. Alright, so that's going to be it for me today, guys. Hopefully you learned something. If you found anything insightful, please let me know in the comments. And as always, like and subscribe. I will see you all tomorrow.